Alert: U.S. bank processing Iraqi dinar cash. Who's affected? Today, January 25, 2026, big news is moving through the dinar community and mainstream banking chatter alike. If you hold physical Iraqi dinar notes, if you follow currency news, or if you simply want to understand what it means when a major U.S. bank starts to touch a currency that for years was largely ignored, this video is for you. Stay with me through the whole report because I'll explain who is affected, what actions banks are likely taking behind the scenes, what holders should and should not do right now, and how to separate careful preparation from hype. I'll speak plainly, step by step, so you can walk away with a clear sense of risk, realistic possibilities, and practical next steps. This is not financial advice. This is a plain English news breakdown for people who want facts and calm guidance, especially for those who's been holding physical dinar for a long time. If you want to post questions after the video, do so. I'll address common questions at the end. But first, let's set the scene, why it matters when a large U.S. bank starts accepting or processing physical Iraqi dinar notes, what that usually looks like in real banking operations, and how to read the signals without falling into panic or hype. For many years, the Iraqi dinar was a fringe currency in the eyes of most large international banks. People who held real physical IQD notes often found it nearly impossible to get help exchanging them at a major bank inside the United States. That was not necessarily a commentary on the legitimacy of the currency as a national tender. Rather, it reflected risk controls, compliance rules, limited demand, and operational barriers tied to verifying and moving a low-volume, high-risk foreign banknote. When a major bank begins to accept or process notes for verification and exchange, this typically signals changes in internal systems, compliance teams writing new procedures, teller staff receiving special training, secure counting and authentication equipment being installed, and reporting channels set up to make sure every step meets anti-money laundering and regulatory standards. For holders of physical notes, this shift matters because it changes the on-the-ground ability to have real notes checked and potentially exchanged through formal banking channels rather than relying on niche dealers or informal buyers. Stay calm. Acceptance for processing is not the same as announcing a revaluation. It is a necessary operational step that often comes long before any public announcement or big market movement. Who exactly is affected by this bank action? The primary group is people who hold physical, paper Iraqi dinar banknotes. Folks who may have had those notes for years, stored in shoeboxes, safety deposit boxes, or wallets. Secondary groups include people holding electronic claims or accounts tied to IQD in informal markets, dealers who buy and sell dinar, and third-party services that help people verify and ship foreign currency. Another affected party is the bank's existing customer base. Customers who already have accounts at the bank may be given an in-branch way to hand over notes for authentication and potential exchange, while non-customers might be turned away or asked to open accounts first. Regulators and compliance officers are also affected, since banks must document how they handle large volumes of any foreign cash to meet U.S. anti-money laundering rules. Finally, banks' internal operational teams, cash handlers, armored transport partners, and currency processing centers are pulled in because physical notes require secure logistics. If you are a holder of physical dinar, the change means you may now have a safer, more official route to have those notes examined. If you're not a holder, this still matters because it changes market accessibility and how exchanges may be processed legally and transparently. Let's be specific about what processing typically means in banking language. Processing does not automatically equal buying or offering a retail exchange rate. Processing usually begins with acceptance for verification. That means the bank will take custody of the notes to authenticate them, confirming denomination, checking for counterfeits, validating serial numbers, and documenting condition. Next comes internal routing. The notes may be sent to a central processing facility or a third-party currency service that specializes in authenticating and counting bulk foreign currency. Banks will log chain of custody records, create internal tickets for compliance review, and flag any transactions that look unusual or above thresholds that trigger enhanced due diligence. Only after this authentication and legal review can a bank decide whether to offer a formal exchange, return the notes, or refer the customer to a licensed foreign exchange dealer. For holders, the practical effect is that you may be asked to wait for a verification process, provide ID and proof of ownership, and possibly open an account with the bank if you do not already have one. The point to stress: processing is about safe handling and compliance first. Buying or a set exchange rate is secondary and may never be offered in branch. Now, what does this mean for expectations about an RV, a revaluation, or a sudden, sky-high rate shift? Here's the blunt, calm truth. Banks and regulators never ever publicly confirm a revaluation in advance. Markets would become unstable and tradable information leaks would lead to front-running. Instead, banks prep systems, run tests, and quietly start handling operations so that if and when a policy change happens, they can execute exchanges efficiently and lawfully. Preparation is not confirmation. It is, however, a real signal that players in the financial system are treating the currency as something to be managed rather than ignored. For long-term holders, that should translate into cautious optimism about the mechanics of exchangeability, meaning there could be more legitimate channels to get physical notes verified and moved, without letting hope turn into risky behavior. Don't treat bank processing as proof of an imminent, massive overnight windfall. Treat it as a practical step in the long arc of monetary normalization and infrastructure readiness. If you hold physical dinar and you are thinking about going to a bank, here's a practical checklist. First, verify whether the bank branch explicitly says it accepts IQD for processing. Call ahead and get concrete instructions. Second, bring strong identification and documentation of how you obtained the notes if you can. Receipts, transaction records, or any proof of purchase helps explain the origin of funds, which banks will want to know. Third, be ready to open an account if the bank requires customers to have an account before processing foreign cash. Many banks only process foreign currency for account holders. Fourth, expect the bank to photograph or scan the notes, log serial numbers, and place the notes into secure transport for central review. Fifth, be patient and prepared for fees or holds while the bank completes verification and compliance checks. Finally, never sign anything you don't understand and avoid third-party intermediaries who offer to fast-track the process for a hefty cut. Legitimate banking steps are transparent. Scams promise magic. Let's talk about risk and scams. Because when a big name like Bank of America appears in rumors or headlines, opportunists move fast. There are countless scams in the dinar space promising insider rates, guaranteed buybacks, or secret briefings. A bank quietly preparing systems will never require you to pay an upfront clearance fee to process notes, nor should anyone asking for large sums to guarantee an exchange be trusted. Also beware of social media posts claiming a confirmed rate or a scheduled date for an RV. Those are almost always speculative or false. If the bank truly changes official policy, the proper channels are formal press statements and written customer notices, not private messages or YouTube-only insider videos. Protect yourself. Never hand over money to get your notes processed. Never pay up front for a promise. And always keep copies of any banking communications. If something sounds too good to be true, it probably is. Another angle to consider is the regulatory environment. Banks in the United States operate under strict anti-money laundering, counter-terrorist financing, and know-your-customer rules. That means any acceptance of foreign cash, especially from a country with past compliance concerns, will be tightly regulated and documented. Expect longer processing times as compliance teams review the origin of the funds. Large cash thresholds may trigger filing requirements, and banks may refuse to process notes from persons or entities flagged in sanctions or watch lists. This regulatory rigor is not a punishment. It is a legal requirement to keep the financial system safe. For you, the practical upshot is that having proper documentation and a clear chain of ownership will make any bank process smoother. If you cannot prove the source of your notes, you may face delays or denial. Again, this is about legal compliance and the safety of normal banking operations. What about non-bank options? For years, many dinar holders used specialized currency dealers, licensed foreign exchange houses, or brokers who have relationships with unofficial buyers. those channels still exist and often operate faster than major banks because they are set up specifically to handle niche currencies. However, they can come with higher fees, and the reliability of dealers varies widely. A major bank entering the scene changes the game because banks offer institutional security, documented processes, and a potentially wider customer protection net. That doesn't automatically make private dealers obsolete. Some dealers will remain useful for quick evaluations or for people unwilling or unable to meet bank requirements. But as mainstream banks build capacity, the incentive for dealers to operate with full transparency increases. Dealers who can't provide proper documentation or who rely on opaque practices may lose market share to regulated institutions. If you're following market chatter, you've probably seen internet claims that once Bank X starts processing dinar, the RV is guaranteed. That's inaccurate and dangerous thinking. The banking system is a tool. It prepares for transactions tied to policy changes, but policy changes come from governments and central banks, not banks processing cash. Think of banks as the infrastructure team. They build the roads and the trains, but they do not decide the destination. Governments, central banks, and international agreements decide exchange rate policy, redenominations, or revaluations. Banks will align to those policies when they are officially made. So as you read headlines or watch videos, remember the chain. Policy comes from sovereign authorities. Banks implement policy. Processing indicates preparation, not policy. What should holders avoid doing right now? First, do not liquidate your entire holdings based solely on rumors. Panic selling during a rumor wave often yields poor returns. Second, avoid pooling money with strangers promising bulk deals or guaranteed notices. Third, do not travel internationally with large bundles of foreign cash without proper documentation. Customs and legal issues can arise. Fourth, don't sign over notes to third parties without a clear written contract and escrow protections. Fifth, don't rely on social media as your only source of truth. Cross-check with official bank communications and legitimate press outlets. Maintain records, protect your identity, and consult a licensed financial advisor if you're planning significant financial moves tied to these notes. At the same time, take advantage of what this development offers. If a major U.S. bank is now accepting IQD for verification, that creates an opportunity to get professional confirmation about the authenticity and condition of your notes. Knowing whether notes are genuine, what denominations you actually hold, and whether any notes are damaged or obsolete is valuable information. That verification can help you plan, decide whether to hold longer, to move into a bank route, or to sell to a regulated dealer. Use the bank's expertise to learn, not as a guarantee of windfall. Remember, verified notes plus clear provenance equals pessimums equal and verified notes with no provenance equals obstacles. Community questions often center on timing. When will exchanges happen, and will there be a public announcement? The honest answer is we don't know exact dates. Banks rarely announce system readiness as a headline. Instead, they roll out pilot programs, train staff, and quietly begin accepting limited numbers of notes for verification. Public announcements usually follow once systems are proven safe and legal frameworks are confirmed. If you are waiting for a public press release confirming an RV, it may never come in the blunt form people expect. Instead, watch for incremental changes, official bank policies posted on websites, branch-level notices about foreign currency handling, and regulatory filings that hint at operational shifts. These small, verifiable signals are how change shows itself before big policy shifts. Let's discuss practical next steps you can take today. Step 1. Do not act on hearsay. Confirming that the long-anticipated revaluation of processing. Step 2. Gather documentation for your notes, purchase receipts, letters of inheritance, or other proof of ownership where possible. Step 3. Photograph your notes clearly, keeping records of serial numbers and denominations. Step 4. Make a plan for transport if you decide to take notes to a branch. Do not carry large sums in public. Use secure methods. Step 5. If a bank refuses to process or accept notes, ask for written confirmation of their policy so you have a record. Step 6. Consider consulting a licensed currency specialist or financial advisor for large holdings. These steps keep you organized, prepared, and legally protected as change unfolds. For those who are not holders but who care, family members, friends, or advisors, here's how to help. Encourage documentation and due diligence. Don't recommend risky third-party buyers. If someone asks for advice, direct them to check bank policies in writing and to avoid fees for promises. Emotional support matters. Many holders are anxious after years of waiting. Remind them that preparation beats panic. Having verified notes and proof of provenance will keep options open. Avoid amplifying rumors in social media groups. Instead, encourage sharing only confirmed bank communications. Being a steady voice in shaky times helps people make better decisions. One of the most common misunderstandings is about physical notes being invalidated or replaced and therefore worthless. Historically, when currencies are redenominated or replaced, central banks provide clear exchange windows and instructions. They do not suddenly erase the old notes without a process. If a country intends to phase out notes, it sets timelines and official procedures for exchange. Banks preparing to handle notes is not consistent with a plan to abruptly invalidate notes without a public mechanism. Again, banks build systems so they can exchange or verify when a sovereign policy is in place. That context should ease fears about sudden annihilation of value without legal process and notice. What about people who bought dinar recently at high premiums from internet sellers? That's a separate risk conversation. Premiums charged by private sellers do not reflect official exchange realities. If you bought at a premium, your break-even point is higher, and you should weigh the cost basis against possible outcomes carefully. Bank processing helps determine genuine exchangeability, but it does not guarantee a market price that covers premiums paid to speculative sellers. Be honest with yourself about entry price and plan financial moves that won't cause severe hardship if outcomes differ from hopes. Again, sensible planning and not risking essential savings is the responsible course. If you are a collector or someone interested in the historical aspect of the notes, verification by a major bank also helps determine collectible value versus face value. Some older or rarer IQD notes may have collector interest that differs from currency exchange value. A bank can verify authenticity, but collectors typically rely on numismatic dealers and auction houses for value estimates. If you suspect your notes have collector interest, get both a bank verification and a separate numismatic appraisal. Doing both gives you the widest picture of possible value and helps you decide whether to pursue a collectible sale or a currency exchange. Now, a quick word about logistics. If a bank accepts your notes for verification, be prepared for a timeline that may range from days to weeks before a final decision or action is communicated. The bank may need to send notes to a central processing facility or to a certified third-party service for authentication. These steps are normal. Keep all receipts and tracking numbers. If the bank asks you to authorize transport by an armored carrier, read the terms carefully and verify the carrier's credentials. Never hand over notes to someone claiming to be a bank official without verifying their identity and authorization. Keep communications documented. Let's revisit the emotional side. People who have held dinar for decades often feel a mix of hope, skepticism, and fatigue. That's understandable. News of a major bank handling notes can trigger a surge of optimism. That optimism is healthy so long as it's anchored in realistic steps. Verify authenticity. Protect documentation and avoid financial decisions driven purely by emotion. If you feel overwhelmed, talk to a trusted advisor who can help you parse documentation and bank communications. Keeping a calm, practical approach will serve you better than chasing every headline. Finally, a few closing points to keep in mind as this story develops. 1. Processing equals preparation, not promise. 2. Banks follow legal and compliance rules, expect documentation and patience. 3. Avoid scams and third-party promises. Legitimate banks do not require upfront processing fees paid to private individuals. 4. Verification is valuable. Use it to inform your choices. 5. If you are unsure, Get multiple opinions. Bank verification, licensed currency dealers, and professional financial advice. This combination will give you a clearer picture of options and risks. Thank you for staying with this full update. If you found this helpful, please like and subscribe so we can keep covering developments calmly and clearly. Leave your questions in the comments. I'll compile the most frequent ones and make a follow-up video answering them. If you are heading to a branch to have notes processed, tell us what steps the bank required so we can share community experiences without sharing private data. Above all, stay safe, keep records, and avoid anyone promising quick, guaranteed riches. This is a slow-moving story that rewards patience, documentation, and careful choices.